Hello, can you believe it? We've made it through another year. 2021 is almost done. We are talking about just a couple of weeks away. And today I'm going to give you the final market update for 2021. I'm going to focus on Olive Orange County, and I'm going to give you just an overview of what is going on and what we're hearing. So one big thing is that just even today in the news, the Fed has come up saying that they will be increasing interest rates next year. Now, when we talk about Fed rates, we're not talking about mortgage interest rates, and I'll post a link for another video explaining that sort of stuff, but it typically does predict and signal what could become mortgage interest rate hikes that are coming through. And I've been talking about this all year, that interest rates have been at historic lows and they will more than likely start going up. And this is just another signal that is likely what will be happening next year. So we'll want to stay tuned for that. What I do also want to bring up is that prices are continuing to soar. We've seen them increase throughout all of 2021 in very, very big numbers. And there has been a lot of comparison of not seeing such a drastic soar in price as it was back in 2008. So, of course, that also brings up that old age discussion or dispute or prediction of whether or not we are going to experience another crash. So let's go ahead and talk about some of the differences. Now, in the past, I have brought up differences such as the fact that people are sitting on a lot more equity these days, what was going on in 2008 and what was going on prior to that led up to the crash, and how things are so different. So I'm not going to focus on any of that. I really just want to focus on price, okay? And I want to talk about price and interest rates because those are two big things that we need to be focused on, and they're also two very different things that kind of dictate will answer this question of whether or not we can expect a crash. So again, I don't have a crystal ball, so I can't tell you 1000% that it won't happen, but I really do not expect for us to see another crash. I was around and in the business during that time of the last one, and it is not the same. So here are some things that I want to point out. One, the average or the median price for a home in Orange County back in 2008 was $748,000. Today, a median price point for a home in Orange County is around $1.6 million. That's more than double. So that's quite a significant jump in price. So if we're only focusing on price, then I can understand how someone gets from the conversation of, oh my gosh, are we peaking? Are the prices just going to come down? Because that is such a huge change in a short period of time, you know? So now, the other thing that I want to bring up is that interest rates in 2008 were around 6%. Okay, so we're talking around 6.2% interest rate for mortgage rates for 30-year fixed back in that time frame in 2008. Today, they're hovering at around 3%. Now, you may find some that are lower, may find some that are slightly higher. You know, of course, there are all kinds of factors, but let's just say 3%. It's a good place to be. So around 3%. If we were to look at a purchase price of $1 million in both time frames, so in 2008 and 2021, $1 million, 10% down, and we're looking at a 6% interest rate, which is what you could have expected to pay in 2008. The monthly mortgage rate for that purchase would be around $5,500. Fast forward to today, 2021, and we look at the interest rates of around 3%, and we calculate the monthly mortgage payment, and we're looking at around $3,800 a month. It's a big difference, right? I mean, I'm sure a lot of us can think of what we would do with that extra money. I mean, we could do quite a bit, right? So that allows us to afford more. So when we hear the term affordability, home buying power, that is what we're referring to. The vast majority of us, we allocate a monthly budget We live off of what we earn, and we have a certain amount that we're willing to spend or that we feel comfortable spending on a monthly basis in order to live that lifestyle. That is where your monthly payment comes in. So today, you can essentially afford a lot more than what you could in 2008. So savvy home buyers aren't necessarily focusing on that purchase price. So when you're seeing that prices are going up, it's because affordability is in a really great place. So someone who in 2008 was paying $5,500 a month for a $1 million purchase, today is paying $3,800, which is significantly less, which means they could potentially go up higher, or they have more money that they can use for other things, such as waiving appraisals or, increasing the purchase price and making up the difference in cash. All kinds of different things, right? So that is what we're seeing. And now that we are getting signals that the interest rates are going up, next year we may see that affordability may change a little bit. However, that doesn't change the prices. It does not change the price. So affordability and price are two different things. So we aren't expecting to see a crash or a big dip in price. What we may see is, instead of having 20, 30 home buyers waiting to make an offer on a home, we may have 2, 3, 4, or 5. So from a selling perspective, you're still making a lot of money off of your equity on your homes. And from a home purchasing perspective, the affordability, depending on how close you are to your max budget, may shift a little. It may not. It just depends on where you're at. Okay, so let's go ahead and focus on what is going on in Orange County right now. So as of this recording, Orange County has 6% less active homes than it did a month ago. Now 6% doesn't sound like a whole lot, but if we compare that to this time last year, which was post-COVID, we're at about 131% less homes than there were this time last year. So that's a big amount. And we're also considering that at that time, yes, things had opened up, but we weren't still, I think we're feeling a lot more comfortable with our new norm than we were back then. Okay, so, and if we look at pre-COVID, so 2019, the amount of homes that were available was 260% more homes available on the market than there are now. And again, for the same time of year. That's insane. So I know I keep harping about how we have inventory constrictions. It's true, we just do not have enough homes available for the amount of folks that are out there looking to purchase a home. Now, with that said, we have 876 detached homes available for purchase in all of Orange County. And we also have another 487 attached homes available in all of Orange County. So not a whole lot when you're considering it's the entire county, right? As I mentioned, the median price point for a detached home in Orange County today is around $1.6 million. For an attached, it's around $590,000. And for days on market, we are looking at 21 days, up from 17 days just this time last month. So it's gone up just a little bit. All right, so what does that mean for you? If you're considering selling, you've been teetering, you are still in a really good position. There are less homes available today, and there likely will be less homes available now that we are in the final stretch of this year. So a lot of folks are just gonna wait until next year to put their homes on the market, which means your home has less competition. There aren't as many homes available, so anyone that is looking is gonna come and take a look at your home. If it's properly marketed and it's priced appropriately, you are going to receive multiple offers on that home. And in addition to that, you're also going to be in a position to set the terms for that purchase. So you're going to be able to say what it is that you need to have happen aside from price in order for you to sell your home. Do you need to stay in the home longer? Do you need a longer escrow period? Do you need to find a replacement home? All of those things can be terms that you build to the sale of your property. So making sure that you align yourself with the right team who can go through all of these things, identify what are those things that you need to have happen in order for you to feel comfortable to sell your home. Now is a great time to start having those conversations and prepping everything up, because you are in a great position to get all that you want and all that you need in order to feel comfortable with moving on to your next home. If you're on the other side of the transaction and you're thinking about buying a home, as I mentioned, interest rates are anticipated to go up at some point next year. So if affordability is a factor for you and you are conscientious of your monthly payment, you want to make sure that you are staying in the game. So don't bench yourself till the end of the year. Don't wait until after January. Continue looking, because guess what? Other people are sitting it out, and that means that there is less competition for you. That means you have less offers that you need to compete against in order to get yours accepted. This isn't going to get any better. There aren't going to be a ton of homes that just hit the market at the beginning of the year. We will likely start to see a few more, but it won't be a ton. So if you are in the market and you're looking to buy, you need to continue looking, and you need to have the right strategy in place as well so that you get your offer accepted. I'm Giselle Vega with eXp Realty here in Orange County, and I'm available to answer any of your questions that you might have. You can also go into a deep dive into a specific area of Orange County if you're interested in buying or selling, and also just answer additional questions about the market here as well as statewide and even nationwide. And as always, I'm just available and happy to serve you in any way I can. Until we meet again, I wish you a very happy holidays and a happy new year. Take care.